Christine Berry, welcome to SCOTONOMICS. We're delighted to have you onto the show. We struggle to get female economists, so we're really happy to have you today. So I've actually just started reading your recent Guardian article, and you stated that the UK has gone further than anywhere else in turning essential goods and services into financial assets. Do you want to talk a little bit more about that to our audience?
Yeah, I mean, the most obvious example, I think, is housing, and the one that everybody can probably relate to just from their own personal experience, that housing in the UK has become a financial asset more so than it has become a home. And that is in large part responsible for the fact that housing is so expensive in many parts of the UK, and is still becoming more expensive. Actually, right through the pandemic, it's become more expensive because it's attractive as a financial asset to people that have got money to invest, be that buy-to-let landlords, be that second homeowners, be that overseas investors that are basically just using British housing as a way to park their wealth. Nobody living in those homes potentially. So that's kind of the most obvious example. But I think you see it right across the economy. So I think another sector that I talk about in the piece is care. And, you know, the collapse of care home chains like Southern Cross or Four Seasons is a consequence basically of putting this essential service in the hands of companies who really see the business itself as an asset for them to leverage and speculate with, load up with debt, pump up the value, pass it on to somebody else. And the debt that's involved in that is the reason that those models are so fragile and so prone to collapse, which is one of many reasons that they're not appropriate for essential services that we rely on, like childcare and elderly care. And, you know, these two things are connected, the sort of property side of things that I just talked about, and how this plays out in sectors like care, because part of the reason that private equity firms are so interested in care, even though as a business it's kind of relatively low margin, high cost, is because it gives them the opportunity to speculate with property. So they get to own the care homes, they get to own the nurseries, they sell them on to a related company, they then rent them back at inflated above market rents. And, you know, it's a kind of vehicle for them to play games, you know, use financial engineering to extract value, basically. So the entire UK economy really has been reconfigured, I think, around these models, and it's just incredibly dangerous and extractive.
Yeah, we spoke to another economist about this, and, you know, he described it as the rentier economy. And I think probably the most surprising example that I came across of that was when I heard that the probation service was going to be privatized. I could not imagine how you could justify the probation service in any kind of concept of a business model. I mean, it's bizarre. We have moved into the bizarre, and our current leadership situation at the moment has really taken us from bizarre to farce. So I think you've explained that really well, Christine. So I have a couple of other questions for you. I see when you're at the New Economics Foundation, your focus was on banking reform. Mm-hmm. Again, can you share some of your thinking with that? We've had another economist on that was very much focused on researching Canadian banking, because the Canadian banking model actually took from the original Scottish banking model. What do you think has really gone wrong with banking in the UK?
Where do we start? I'm actually writing about this at the moment because I'm just writing the chapter of my next book on money and banking. So my head is really in RBS, actually, which is something that we did a lot of work on when I was at NEF, which is a really good example, I think, of a bank that kind of morphed from being a fairly sort of conservative, traditional, you know, retail high street bank, like venerable Scottish institution, into becoming this huge kind of global behemoth with tentacles right across the world, massively over leveraged, balance sheet bigger than the entire UK economy, which is the reason that we had to bail it out, because it just couldn't be allowed to fail. And I think, yeah, more generally, what's gone wrong with UK banking is that rather than being seen as a utility that exists to serve the real economy by lending to small businesses, by, you know, providing people with access to basic banking services, high street banking, we've seen it as a sector in its own right, as an export sector. So like the way that banking is going to serve the economy is by creating jobs and creating tax revenues, by selling complicated, exotic financial services to the rest of the world, basically. And that is still the case, even 10 years on from the crisis. Like, for all this talk of levelling up and like for all the rhetoric, if you actually look at the well, I say the current government, by the time this goes out, it might not be the current government anymore. But, if you look at the Conservatives' current policy towards the city, it's basically kind of 1990s time warp. Like, we need to promote the global competitiveness of financial services. And there's just a huge amount of research now showing that model of financial services does far more harm than good for the rest of the economy, because the risks that it creates, which are ultimately, as we saw in 2008, are borne by the state and are borne by ordinary people, many, many times outweigh the value that it creates, a lot of which is kind of fictitious value anyway, that's, basically a function of blowing up speculative asset price bubbles. So yeah, that's my short version, as short as I can make it, of what's gone wrong with UK banking.
It seems to me that a lot of politicians think that they have to run the country like a business, and they don't really understand the powers that they have as being a currency issuer. I'm talking about the UK government, obviously, here. That the Bank of England is essentially under their control. It might have some powers over controlling interest rates, but fundamentally the Chancellor appoints the manager of the Bank of England. Do you think that there's an awful lot of politicians that really just don't actually understand how the economic system works? Do you think they get good enough advice?
I'm not sure anyone really understands how the economic system works. I think a lot of the problems that we've had in the last few decades, to be honest, have been the result of kind of false certainty that is generated by economic models, which, again, as we saw after the crash, like, they were just wrong. They were just flat out wrong about what was going on in the economy. They weren't based on reality. They weren't based on empirical data. They were based on kind of the theories of neoclassical economists about how the economy ought to work. And that form of knowledge has been valued above any other form of knowledge about what's actually going on in the economy and people's daily lives. I mean, when you described me in the introduction as an economist, I was like, I still get imposter syndrome about being described as an economist, because I don't have formal economics training. I'm trained as a political economist, which is a slightly different thing. And I've had to work really hard to try and overcome that imposter syndrome, because, so many people that I know who are economists and have been trained, done economics degrees, they're like, it's all, I don't know if I'm allowed to swear. Am I allowed to swear? It's all bullshit. It's basically all bullshit. But it's kind of, it's got a monopoly on kind of perceived wisdom, Well, I think that is starting to change now. I think that is changing, but I don't know to what extent it's changed, to be honest, within government and within the political system, and the Treasury, especially as an institution, I think still seems to be really dominated by not even actually by economists, but by kind of recent graduates with half-digested, half-baked understandings of orthodox economic dogma. And that is basically appears to be the basis for a lot of decisions that get made in government about what's good for the economy or not.
What we find is that, if we're speaking to other economists, a lot of them who are in kind of on the MMT side, they've gone through this journey. They've learned neoclassical economics, then they've gone into the workplace or they've gone into academia. And then at some point they've just thought, am I teaching the right stuff here? Does this make sense? Or, I worked in finance and what I was told how a bank works is completely the opposite of what actually happens. And it's like a journey. And I know a lot of advisors in the Scottish government as well are still younger, and they are coming out with this very formal education and starting to influence as if this stuff is absolute certainty. And what we often discuss is that there's no more complex a system than the economy, and this idea that you can say press this button and these things will work has been just completely disproved. But we're not moving that. To finish on regulation, Christine, the Sustainable Growth Commission, which was the kind of definitive paper that Scottish government has looking at the economy, one of the things it said was that if Scotland becomes independent, we were going to grandfather all the regulations from financial services. So we were just going to take everything that was happening at the moment and bring that into Scotland and run with that. I don't think many people are aware of that, but we've discussed how kind of fundamentally different that casino Anglo-Saxon form of risk banking is compared to this more Presbyterian, slightly more less risky approach that Scottish banking has. if you didn't know that, does that surprise you? And if you were advising the Scottish Government, what are the types of changes that usually should happen with regulation?
Basically, there was a kind of move after the crisis to try and sort of deal with the problems that the crisis had generated by adding kind of layers of complexity to regulation to try and police the business models of big banks, right? So you have these very complex risk-weighted capital requirements that try and calibrate, how risky different types of assets are, actually often with kind of unintended consequences, both at the bank level. So, for example, small business loans are treated as being more risky than mortgage loans, which kind of incentivizes the wrong types of lending, and also at the system level. So, big banks like RBS or HSBC have the kind of huge compliance teams to deal with these regulations, and smaller banks don't. So, I feel I'm told that this was one of the factors behind Airdrie Savings Bank, which was the last independent trustee savings bank in the UK, based just outside of Glasgow, closing its doors a few years ago, was it just couldn't cope with this kind of influx of post-crisis regulation that it had to comply with. So I think the UK regulatory system still doesn't really get fundamentally the importance of institutions and the composition of the system as a whole, the desirability of promoting a banking system that is more diverse, that is made up of a wider range of probably smaller, more democratically accountable, to be that to their local communities or via cooperative structures, more focused on high street banking, more focused on lending to the real economy and less on blowing up asset price bubbles. I think there's been progress since the crisis, but I think regulation still fundamentally, it kind of reinforces the dominance of these big shareholder-owned banks. Even though we know that at a system level, that's bad for the real economy and it's bad for financial stability. So that would be the kind of key, that would be my starting point if I was advising the Scottish Government on what it should be doing differently.
We would love to kind of dig into a little bit more about the English economy and separate that from the United Kingdom economy. And something that I'm sure you're aware of is that Kieran and I, as Scots, we often hear people talking about the Scottish economy and saying it's just whiskey, oil, and salmon. And we say, no, there's so much more to the economy than that. But I was wondering, when you're looking at the English economy, you'll probably hear people say it's just Brompton bikes and Wensleydale cheese. What else? And I just really kind of wanted to get from, what are the things that make the English economy it's such a big and powerful economy? Because I don't think in Scotland there's enough of an awareness about the size and the success of the English economy.
So this is an interesting question. I mean, I guess my take on the English economy as it's currently constituted is that its fundamental problem is that it doesn't really produce enough, but that it is basically built around these kind of, you mentioned the word rentier earlier, like rentier activities, like financial services, the City of London, and this kind of permanent house price boom being used to create the sort of illusion of wealth creation. And I think the problem with that is that it kind of actively makes it harder. It suppresses kind of other forms of industry that would otherwise find it easier to flourish. So, like, for example, the fact that we've got international capital pouring into the City of London pushes up the value of the pound. That makes our exports more expensive. That makes it harder for manufacturers to scale up and to export. And likewise, with rents being so high, that's actually a barrier to entrepreneurship. I think, if I speak to, we're talking about co-ops, like people that I speak to are trying to set up cooperative childcare or whatever it is, like finding affordable premises is one of the key barriers that they face. But I think there is, underneath that kind of layer of the sort of big beasts of the UK economy that are perceived as being the ones that we depend on to create value, but actually are really just extracting value. As you say, I think there's huge potential for building a different kind of economy, that is more rooted in local communities. I think the community wealth building movement is testament to that, right? And I think what they've done in places like Preston, where the city council has really tried to kind of direct their procurement spending, their local economic development policy towards saying, actually, we're going to support local businesses, including kind of helping new co-ops to start up in different sectors. We're going to try and keep wealth recirculating in the local economy by building this kind of ecosystem of local institutions. And I think you're seeing that approach now starting to be adopted across more and more parts of England. And for me, like that has to be the future of, you know, if we're going to build an economy in England that's capable of surviving the kind of global economic ructions that we're seeing, that's the pivot that we need to see.
You don't think there's enough variety?
I think there's a top heaviness is what I would say. I think, yeah, the variety is there, but it's being held back by this kind of outdated idea that the way to secure England's success as an economy is to promote the city and is to keep house prices going up. And of course, the reason that the government wants to do that is not just because they believe it's right for the economy, it's political as well, right? A, because of their donors, like the people that donate to the Tory party. Overwhelmingly, it's property developers and financial services firms, and also because of their electorate. And I do feel, I mean, maybe this is something interesting to talk about, because I feel the whole of the UK right now is being held hostage politically to the votes of a relatively small number of retired homeowners in England. And because those are the swing voters in the seats that can swing a general election, you know, the entire economic policy, the entire debate, political debate, for the whole of the UK in a way, is kind of revolving around the perceived prejudices and the perceived material interests of this like very small subset of voters. And that's not in the best interest of most people in England, never mind any of the other nations of the UK.
Well, that is interesting, because that just shows that the economy is actually led by politics rather than the other way around. Because, you know, you're a brave government if you come in and say the first thing we're going to do is make sure that there's no rise in prices of housing for a decade. You know, that's not a popular government. And, you know, when we interviewed Laurie McFarlane, that was exactly what he was saying. It's something that everyone knows is a problem, but you wouldn't be elected trying to fix that. So they just keep that kind of that momentum, that treadmill just keeps going on and going on, and because those people have such influence.
Yeah, exactly. And I mean, Laurie knows better than anyone, because he was one of the authors on the Land for the Many report that Labour commissioned in, I think it was 2019. And I'm not sure any of the authors of that really expected the, like, frankly quite hysterical backlash that they got from the right-wing press to what were kind of fairly sensible, moderate proposals. You know, they were very explicit about saying, we're not even suggesting that house prices should try and be brought down, because that would kind of have unintended consequences for people, and it would have unintended consequences for economic stability. You know, we want to stabilize house prices over time so that they don't keep on going up relative to incomes. And just, yeah, the level of backlash that they got to that was unreal. Like, it was completely insane. So I think it is a real problem. Like, housing is so critical to everything that is wrong with, you know, the English economy in particular, but it's politically so difficult to do anything about. I mean, although Positive Money recently commissioned some research, some polling, which suggested that might be starting to shift, just because things are getting to a breaking point where it's so obvious to everybody that the system is broken. And their polling suggested that more than half of homeowners said they would be happy to see the value of their home not increase over time if it meant that other generation, you know, the generations below them could afford to buy a home. So maybe there is some hope on that score. Yeah, and I mean, I don't know if you've discussed this on the podcast, but obviously Laurie's done some really amazing work recently with Miriam Brett from Commonwealth on land and kind of green land grabbing, basically land grabbing for carbon offsets, and how that is contributing to rising price of rural land in Scotland. And I believe, just from speaking to Laurie, that the Scottish National Investment Bank has actually invested via a London-based asset manager in some of these instruments that are being used to, with this rewilding, biodiversity offsetting. I'm not sure in that case specifically what it is, but it is basically kind of strategies to sort of turn sustainability into a rent extraction opportunity. And in doing so, you're kind of inflating this speculative asset price bubble in land, which is bad for local communities, right? But I think it's becoming a real problem for communities that are trying to take ownership of land, as I understand it, in Scotland now, because values are just going through the roof because of demand from these speculative investors. So I really agree. I think if we're talking about just transition in Scotland, you can't escape these dynamics around ownership, around wealth extraction and wealth redistribution. You just can't.
So obviously the Scottish government's not a currency issuer, and it is currency constrained. And we were talking to a New Zealand economist last week, and it's clear that with economics you have to think quite far, you have to game quite far ahead in policies that you're going to bring forward as a government or as a financial institution. So, in essence, the idea of having more trees is in of itself, a well-intentioned thing, but it's looking down the line and seeing how that's going to affect other people going forward. And our last guest was talking about how they wanted to increase the dairy industry, but that was done so quickly that then that also was having a really detrimental effect on their watercourses and their environment in general. And they just hadn't foreseen those things. So you really have to think very far ahead and do a lot of gaming before you put these big policies into action.
Yeah, I mean, I suppose it goes back to what we were saying earlier as well about complex systems, and this is the illusion of certainty when you're intervening in a complex system, that you can kind of predict in a linear way all of the impacts that that's going to have.
Just a question around Brexit, and I'm just wondering what your thoughts are on what impact it had on the UK economy.
So I would have to caveat this by saying this isn't really my area of expertise. It's probably something I should have an opinion on. But I mean, the figures that I've seen and the graphs that I've seen, certainly coming from places like the FT even, it does seem pretty incontrovertible that Brexit has had quite a negative impact on exports. Right, you see UK exports just basically fall off a cliff. Business investment, the same, has just never really recovered from Brexit. And I think at the moment it's quite difficult to sort of disentangle all of these impacts because you've got the pandemic as well. You've got a government that is a complete clown show, and essentially has no economic strategy. So it is quite difficult, and it's sort of easy, therefore, for them to kind of mask or to pretend that those impacts of Brexit are the result of something else, or just the result of global economic headwinds. But if you look internationally at the comparative data, and actually also if you look at the comparison between Northern Ireland and other regions of the UK, so I saw some data recently suggesting that apart from London, Northern Ireland is the only region of the UK that now has GDP above pre-pandemic levels. So that is a fairly clear indication. I mean, spot the difference between Northern Ireland's economy.
It doesn't normally. It's the same or the same as the rest, but something has happened.
Something has changed, right? So, and no prizes for guessing what that is. So I think that there seems to be pretty incontrovertible evidence, as far as I can see, that it's having a negative impact. But politically, I think that hasn't become the issue that it might have been if there hadn't been so much else going on with the pandemic and the cost of living crisis. It's very difficult to kind of pin that on the government in the way that it might have been otherwise.
Looking at the English, the UK economy, not what you would like to happen, but what do you think is likely to happen with the economy now that we're outside the trading bloc and we're looking for different ways of doing things? There's talk around the UK being like a Singapore of Europe. Have you any thoughts on what the UK economy, where it might be going over the next decade or so?
So this is my big fear, basically, is the kind of Singapore on Thames model. The UK already is responsible for so much of the kind of offshore tax haven activity around the globe, whether it's actually in the city of London or via various kind of crown dependencies, the British Virgin Islands or whatever. And I think it was really clear, even during the Brexit campaign, it was really clear that a lot of the key figures that are now in government, like Dominic Raab, basically wanted to see this sort of the UK becoming the tax haven of Europe and kind of remodeling itself as a ultra low tax, low regulation jurisdiction. I think what's been interesting over the last couple of years is that there's a real incoherence, and this is one of the things Laurie and I wrote about in the essay we've just done for Renewal Journal on Johnsonism. There's a real incoherence between that vision and some of the government's rhetoric around levelling up and the demands of Boris Johnson's electoral coalition, which was predicated on winning a lot of sort of formerly so-called working class seats in the north of England, where people wanted to see levelling up. They wanted to see a closing of regional divides, reinvesting in towns and rural areas. And I think it's widely acknowledged, even in government, that sort of model of, relying on the city, cutting taxes, cutting regulation, is partly responsible for the disaffection that is felt in so many of those kind of former industrial heartlands, right? So there's always been a kind of contradiction and incoherence there. The recent kind of moves on deregulation of the city, they're currently trying to put back in a requirement on regulators to have regard to the global competitiveness of the City of London, which we used to have, and then it was removed by George Osborne in 2012 because it was accepted that it had helped cause the financial crash, and now they're trying to put it back in. So this is what I mean when I talk about kind of 1990s time warp. There's really no new ideas, I don't think. My worry is that at the moment, there's not really any new ideas in the Labour Party, never mind the Tory party. And so we're just kind of in this whirlpool of, trying the same failed things over and over again while things get worse and worse and worse, and we spiral down the plug hole. So that's my doom laden scenario. I think what makes me feel potentially slightly more optimistic is that I really think that is nearing a breaking point economically and politically for this country, especially with the cost of living crisis, the explosion of poverty that we're seeing. I mean, as we're recording this, the government is literally collapsing around our ears. Boris Johnson has just said he's going to resign. We're in a complete constitutional crisis, political chaos. This can't go on very much longer, right? I think hopefully sooner or later the Labour Party will also realise that if it really wants to take advantage of that political moment, it needs to offer something different. It needs to offer something new. And that has to mean a pivot away from this kind of failed economic model. So that's my more hopeful scenario.
Well, yeah, exactly. We've got to realise it's not Boris Johnson, it's not the Conservative Party, it's this neoliberal model of the economy that we've got. Because what's interesting from a Scottish perspective, Christine, is that the Scotland's National Strategy for Economic Transformation, if you haven't had a chance to read it, it was out in April. I'm not would be surprised, but if you read it, it looks like a perspective from the Conservative government in 2010, and it talks about this kind of compassionate, this idea that you can level up is a real strong narrative. And I've just gone through the document, looking at what this says, and at the end of it, it's just a new neoliberal perspective for the Scottish economy. So I think we're in a very similar position with the current administration. It's looking at all the lessons that should have been learned and thinking if we just do it slightly differently. And I want to draw that back to what you said about the work that you were doing. And it does feel like you're kind of flicking a pea at a charging rhino by out with all of these small things when no one has really got a perspective to look at the economy and say, we have to do this completely different. Who do you think's explaining that vision at the moment that would hopefully have influence of the political parties in the UK?
I mean, it's difficult. I think the difficulty when it comes to the UK as a whole, the difficulty at the moment is that so many people who had any sort of vision for how the economy could be different basically kind of got behind Corbynism, engaged with Corbynism, because they saw it as the most realistic route, the best chance of fundamental change in the UK that they'd seen in their lifetimes. And I think since the failure of Corbynism, the problem with that is that basically anyone who's got any kind of new ideas about how we should run the economy differently is sort of seen as being tainted by association, because the Labour Party has been captured by a sort of very anti-Corbynite faction that are so determined to distance themselves from anything that happened in those years. And I think that is in large part responsible for the problems that they've had articulating a vision, because where do they go? There's nobody that they're willing to take advice from. Even the big think tanks in the UK are kind of seen as being too left wing by the Labour Party now. So I think that's kind of in large part is responsible for the sort of vacuum that seems to exist in UK politics right now. I mean, Scotland maybe is slightly different and more interesting. I mean, I did a piece of work I was thinking about as you were talking actually about Scotland's economic strategy. I've just done a piece of work for the Scottish TUC on care. and the proposals for a national care service, kind of setting out how that could be done differently. And we took to the Commonweal Care Reform Group, obviously, as part of that as well. And I think the National Care Service seems to me to be a really interesting example of the Scottish Government kind of talking a good game and adopting the kind of terminology of economic transformation, whether it's community wealth building or just transition, or, you know, in this case, National Care Service. But when you kind of scratch the surface and look at the proposals that they're putting forward, it's kind of mainly just rearranging deck chairs, I would say, the National Care Service. You know, there's a lot of changes being proposed to how care is commissioned, not a lot of changes being proposed to how care is run, and particularly who owns and runs care, and whether these big private equity chains that we were talking about should be allowed anywhere near care homes, which in my opinion, they absolutely shouldn't. So I think working with the unions on that has made me feel has it made me feel more optimistic? I don't know. But, you know, I think the ideas are there, and the civil society grassroots infrastructure is there in Scotland. I mean, you will know better than me whether the Scottish Government is remotely listening to any of that.
Can I just come back on that report? I'm going to jump to the defence of the Scottish Government here, and just remind you both that the Scottish Government is not a currency issuer. It cannot run deficits. It does not create the money supply. So it has to look for currency from private sources. I would say from the currency issuer's perspective, the UK government, it has made the mistake for many years now, most of my lifetime, and I'm 55 now, that they have taken the view that you run the country like a business, and it's not a business. And, you know, the gold standard was dropped in the Second World War, in the First World War, and permanently dropped in 1971. We run a free-floating fiat currency. It's what you do with that and how you create value that matters. Now, Scotland's not in that position. So it has to find currency from private people. It has to find that currency. So because, again, a lot of people are under the impression that because we do income tax, that gives us extra currency. It doesn't. The UK government takes that money back. You know, they get the block grant and then they calculate how much we're going to make on income tax, and then that comes off the block grant. So, you know, we're always going to be currency constrained. We can't run deficits, and deficits are not a bad thing. Again, people think that that's a bad thing. Deficits are the money supply that's out in the economy and that hasn't been taxed back. What the Tories have done for years and years and years is just allowed the money supply to sit in certain people's bank accounts and make them feel really happy with themselves. And that's not what money is for, or currency is for. The currency creator should be using that money to create goods and services to benefit the whole of society, and most especially to make sure that the most vulnerable in society, the elderly, disabled, or children, are all well cared for, and that we nurture and nourish them both physically and intellectually, and that we make our people and our country, the UK as a whole, as strong as possible. They just don't seem to understand that that's actually their function. I just don't understand why they don't understand that.
Yeah, I mean, fair enough. Yeah, okay. So obviously, I would totally accept the Scottish Government is under certain constraints when it comes to, you know, not just monetary policy, but fiscal policy as well, and, you know, its ability to borrow, and that kind of constrains what it can do.
But you don't borrow in your own currency. When you're a currency issuer, this is a nefarious term that we should eschew. The UK government does not borrow its own currency. It creates time-served bank accounts called treasuries. That's what it does. And it doesn't need to borrow its own currency. That's, you know, it can create those treasuries, or it doesn't have to. So, you know, this idea that, because many people accepted austerity because they believed that their grandchildren would have to pay public services that they benefited from because we borrowed to create them.
Yeah, I mean, I totally agree with that. I feel on the wider macro stuff, we're getting into debates around MMT that I feel are possibly slightly beyond my expertise. I remember saying on a WhatsApp group recently, it's a bunch of economists who I'm in a WhatsApp group with, and some of this stuff around macroeconomics and MMT versus post-Keynesian, it's the kind of thing where I tend to take my opinions from people who do actually have like formal training in that stuff. But on this, the people that have formal training in that stuff who I usually take my opinions from seem to disagree, which isn't very helpful. So like, what they do agree on, like, I think a lot of the debates are actually quite technical. I think what most people do agree on is that, say, the UK government that issues its own currency has substantially more latitude to do the things that it says it can't do. That's what the post-Keynesians and the MMT crowd all agree on, irrespective of their kind of positions on the technicalities of how the system works. Do you know what I mean? So politically, I think it takes you to a very similar place.
So one of the latitudes that England enjoys is the amount of people it has. And, people are a real resource. Now, you've maybe heard that the statistics that, our death rate is taken over our birth rate. And this is particularly acute in Scotland. And, even since the 1970s, our proportion of population has gone down. We used to be 10% of the UK population in the 1970s. We're now 8%. And at the Act of Union, we were 20% of the UK. So people are a really big resource. And when you have so many people, if you're a government that understands what you're doing, then you should be mobilizing that resource. But I can also see that from the point of view of more right-wing politicians, their concern as well is that if you have such a large public sector, then that can also hold the politicians to ransom. So we also have a situation here where we've just nationalised ScotRail. And the train drivers have gone out on strike. so we've already experienced that again, where people will see, oh, well, it wasn't, the private model wasn't great, but the public model now is also causing problems. So it's really difficult for people to understand what's the best way to go with this situation.
I think it's a really important point that you make about people, and maybe this is where I stand on the whole kind of question of the money supply. That, I think what most schools of thought can agree on is that what matters is the real productive capacity of the economy, like people, resources, actual things that you need to do stuff, and the amount of money that you can safely create in the is basically a function of that. Whereas the kind of economic orthodoxy that we've been living with for the last few decades kind of flips things the other way around and kind of makes out that money is the constraint. Like, there isn't enough money to do these things that we want to do. And I think that's kind of probably the thing that we can all agree on, that we need to challenge, right? We've just been beholden to this idea that we can't do the things that we want to do, even though, as you say, like in many cases, we do have the real resources, the people, the natural resources, the materials to do the things that we want to do. And the government's job is to make the economy function so that it makes that happen, which is manifestly failing to do at the moment.
Well, my final question for you is, when we're looking at that charging rhino and flicking the P at it, we think that Scottish independence is maybe something that will change that charging rhino in terms of this UK model of the economy and the institution. And we think that if independence for Scotland comes, then that's one of the things that can kind of derail this charging neoliberal rhino. Have you any thoughts on that?
I think, I said a bit earlier, didn't I? I think we're in a real moment of crisis for the UK as a whole. It's an ongoing rolling crisis that's been going on for many years now, but the last couple of years in particular, it's really felt to me like the union is disintegrating, like whether people in England like it or not, and that it's really only a matter of time. You just saw with the pandemic the kind of diverging responses of the devolved administrations, for example, compared to the approach that was taken in England. And at the time, I remember thinking, I really feel that this is going to seem, in hindsight, like a kind of a turning point along with Brexit. And I think people becoming just more and more aware of the extent to which the entire UK is being held hostage to a small set of vested interests based in a small number of constituencies or powerful places in England. And I think, I do... I feel conflicted as someone who lives in England, because English politics and the English economy is such a basket case.
Train and rail service up to Scotland from where you are.
Yeah.
And we welcome you with open arms.
Part of me kind of does worry about that, but the better part of me thinks that actually this is what we really need, is a revitalization of democracy. And part of that probably is going to be renewed calls for independence for devolved administrations for not just Scotland, but in Wales and Northern Ireland, it's just becoming more and more of an issue. And even in the north of England, to be honest, where I live, so I live in Manchester, and it really felt here during the pandemic as if there was a watershed moment where they just put us in lockdown. London put the Northwest in lockdown and just kind of left us there to rot for months. And I literally think most of the people making decisions had just forgotten that we were all essentially in lockdown. And Andy Burnham kind of came out all guns blazing and made some quite feisty interventions on the national stage about that. And this is what I mean when I say the pandemic felt to me like a kind of another watershed alongside Brexit. I really think these demands for more devolution, more independence, more local democratic accountability are not going to go away. And I think that is what we need to see if we're going to fix not just our politics, but our economy as well.
Christy, thank you very much. That was a fascinating interview. We really enjoyed the time you could spare with us on SCOTONOMICS. Thank you very much.
Oh, thanks for having me.
Thank you.